Thank you for joining us on the Real Estate Investing Book Club podcast with your hosts, Chris and Mike.
Great to be with you today on this episode of the Real Estate Investing Book Club. Just want to take a chance to introduce myself. Welcome, listeners. We're so glad you're here on our premiere episode. We'll introduce the show's concept here. We take real estate investing books that Mike and I love talking about, and we get into them. And I think it's great because it gives us the opportunity to share. Plus, you guys can learn as well and do some coaching. And just let me introduce Mike. Mike, if you want to introduce yourself, I'll let you go ahead, and then we'll let you talk about what book we're talking about today.
Sure, absolutely. My name is Mike. I'm a newer real estate investor. I've been doing it, I guess, a few years, both internationally and in the United States. Prior to that, I was in the U.S. military. And just as Chris said, we love to nerd out and speak about books predominantly pertaining to real estate investing. So here we are. Here we are bringing this concept into a podcast, and here we go.
I love it. What book we getting into today, Mike? I'm excited about this one.
Absolutely. The book we're going to be talking about today is Rich Dad, Poor Dad by Robert Kiyosaki. And I got a copy of it right here.
I love
it. That's what it is. Sorry for the glare. Written in 1997, but so many principles still hold true. I think they're almost kind of universal. They're evergreen.
I love that. I was just talking to somebody else on a meeting today. They brought that book and why it was important and how it demonstrated in their life and how they had a poor dad and a rich dad. And it was great. So I think it's a great place to start. And why we're starting here is this is not a how-to investment manual. I think you and I both agree on that. But it is considered, I think, by most the gateway drug for every real estate investor. And it gets into more of the mindset, I think, versus just how to, but the mindset of investing. So if you had to summarize this, Mike, what would be the core wealth building strategy in the book that you got out in one sentence? What do you think that would be?
I would say in one sentence, if I was to try to distill the message of this book down, it would be to buy assets, don't buy liabilities. And of course, an asset, we're real estate centric here in this podcast.
Mm-hmm. Yeah.
So again, an investment property is something that you pay for that will pay you over time. Hence, that's what we will consider an asset. Whereas a liability, for example, we'll talk about a car. So if you buy a brand new car, the moment you get into it and drive off the car dealership lot, the value of that just starts to decrease. So again, to rehash, my one sentence summary of this book again is to buy assets, not liabilities.
I feel like we should have talked beforehand because you basically stole my thunder, Mike. I say the rich buy assets. If I can sum this up, the rich buy assets that put money in their pocket, and the poor and middle class buy liabilities. So you kind of stole my thunder, but I'll forgive you on this one. So let me get into one of my questions here. I kind of want to hear what you have. Who do you think this book is actually for, Mike? If you're talking to somebody and you recommend this, who would you recommend this book to, or who do you think it's for?
I have recommended this to my nieces and nephews who are younger. They're college age, high school age, into even middle school. So I say the younger the better. That's who I would recommend this book to.
Yeah.
But I'd say it's great, and there's a lot of lessons to be learned for people of all ages. But anybody that's, again, I think this is ideal for younger people because it's explaining a different way to think about things. It's a paradigm shift.
Yeah.
So I think the younger that you're able to understand, one, what a liability is and what an asset is, and then two, how you can apply that in your life going forward. And again, if you're a young kid, we always talk about compounding interest.
Yeah.
So the younger we get somebody to really shift the way that they think, compounding interest is just gonna really add fuel to that fire.
Awesome. I couldn't agree more on that. I think new investors, new people getting in, it really just talks about the mindset. I totally agree with that. I think you kind of hit when the book was written 1990s. I think, and looking at that, and one question I have for you, Mike, is do you think the author's primary strategy, even though it was written in 97, the 90s, do you think it holds up in today's interest rate and housing market environment?
I do. I absolutely do. It just might be harder to find a good deal. But again, some of the core tenets about, educating yourself and networking and seeing what you can bring to the table, what you can offer to other
Yeah.
people. Again, Kiyosaki speaks about that quite a bit. So again, even if there's maybe not a lot of inventory on the real estate market, interest rates have gone up significantly since the pandemic era. However, uh, these core tenets hold true. So again, if you're able to add value to other people and build a network, and that, I think those core tenets, like I said, will allow you to be successful even in a market that might be a little bit more difficult.
Okay. Okay. I would agree with that. I think just to back up, piggyback what you're saying, 100% agree. But I think the widening gap with the ultra wealthy and then the poor between the poor and the middle class, I just think it's become more synonymous with debt in America and just how, each person, the national debt. I just think it's become even more important and these topics are more prevalent or more, this topic is even more important for folks. So, um, let's get to the meat and potatoes of the book. I think it's a great book. We talked about the book, but what is the biggest aha moment or paradigm shift that you had in your thinking while reading this book, Mike?
There's a lot. There's a lot there.
Sure.
So that's why I say it's great for younger people
Yeah.
because just like we were saying before, if interest rates are raising up, if the inventory is down a little bit, if it is a little bit more of a challenging market, and as far as real estate goes, this book is great because it's all about it. It really drives the point home to not be transactional, to not show up and say, "Hey, I want the best deal in the world."
Yeah.
It really drives home the point to develop a network, number one, and then two, really be somebody that can add value to that network. So again, maybe you can be top of mind if a deal comes up.
Yeah.
If you're a good go-to guy, if you're a good resource for the network that you develop over time, people will be top of mind. You will be top of mind to other people, and if they say, "Cool, I'm Mike, and I'm looking for a single family house," and they happen to see a deal, somebody in your network or contemporary, what have you, I think,
Yeah.
maybe they might shoot you a text, give you a phone call. So again, it's not being transactional. It's about adding value to other people. And maybe that doesn't involve business. Maybe that just involves being a good neighbor, being a good person.
Yeah. Yeah. I would agree with that. I would agree with
What
that
about
100%.
you? What about you? What was the biggest paradigm shift takeaway that you got from this book?
Look at that. It's a great question. I mean, and I really liked your answer to look at that is if I was a new investor reading this book or somebody that has $0, zero network, and maybe that's not where you are, the person listening to this today, but maybe it is. I like what the exact first step the author says you should take. And it's interesting. He gets into a good writer, somebody who writes and is interviewing him. And he suggested, she had said, "Hey, you're a best selling author," but she was a best writing author who wrote much better than he did. And he encouraged her to get a sales job and marketing job. And she thought it was beneath her and she wouldn't do it. And she walked out of the interview that she had with him. And I thought that was really interesting. I think a lot of people think that sales and marketing is beneath them. And I think it's a great travesty. Like you said, using your network, talking to people. I think these skills of communication is super important, especially in selling or generating an idea, and how you can help and add value. We talk about this all the time. And I think that was for me, go to work somewhere and just crush it with sales and marketing, and your business will grow because you're learning these skills. I think that was really important to me, and it hit me in that books. This is what I did. I partnered with somebody. I learned sales and marketing. He was great at construction. We had our different skill set, and it caused our business to explode in a little over a year. So I think just kind of using some of the skills and things he talked about, it really challenged me a little bit in what we're doing. That's a good question, Mike.
It's a great point. It's a great point. Yeah, you could write the best book in the world with the best blueprint that's ever existed. But again, if you can't get the word out, what
Yeah.
good is that? So again, you got to be able to
Yeah.
sell yourself or sell whatever product, good or service you might have.
Yeah, I agree. One of my favorite authors, he's a great author, and he had a title for a book, and it's funny that it didn't sell and it kind of flopped, and he changed the title and it became like a bestseller. So it's interesting how in a little marketing strategy, something like that can happen and it can make it go really well. Even though it's the same book, same author, same content, but just the title itself really appealed to more people and it just took off. All right. Where we at here? Getting into investors. I know, Mike, you've already got some properties. So for an investor who already has some properties, maybe has 1 or 2 or 3 properties, how does the book teach them to scale? So maybe 30 or do something different. What do you think, Mike?
So Robert Kiyosaki talks quite a bit about systems.
Yeah.
So if you have 1 property or 2 or 3, you might be able to not be organized, and you might be able to put out fires as they appear.
Yeah.
But I think if you start scaling and having more assets, as you mentioned, 10, 20, 30 different assets that you need to manage or you need to be responsible for, then at that point, systems are absolutely essential. Otherwise,
Yeah.
it just doesn't seem viable to run around and put out fires in 30 different assets, 30 different properties,
Yeah.
for example. So yeah, building systems and building your network. So
Yeah.
again, if a problem does arise, whether it's, construction related, if it's finance related or what have you,
Yeah.
if you have good context in your Rolodex to say, hey, Chris, I have problem X with whatever property.
Yeah.
I'll tell you right now, you're my first phone call. So, usually you always have an answer. If not, you have somebody in your Rolodex that will give you an answer.
Yeah.
So again, just building relationships and building systems, I think are the essential elements to scale as a real estate investor.
Yeah, I like that. I like how you bring up your network. I'm really big about that. I agree with that 100%, and I think that's super important. I agree. I take a flip side or a different angle of this, Mike. I kind of looked at the book is I think about growing or scaling. I think it's really your mind. Like we are our own worst enemies. I believe that. And he talked about thinking, how one dad said you can't. Then his rich dad would say, how can you? And really training your mind to see there's deals everywhere. And then looking at, that I believe there are deals everywhere. Then you start using your brain to structure deals and terms in your mind that can help you scale. And it's really your mindset. And I think, and knowing what to look for and what to do and say. And I think, he talked about this. It's not always price, but terms. And maybe you can give somebody price, they can give you terms or vice versa. So I thought that was really important in the book. And I got a lot out of that. So
Absolutely. I mean, you just brought up mindset, and I would say the beginning of this book is just as much of a book about investing and finance
yeah,
as it is about mindset.
yeah,
Uh, Difficulties will happen in life. So as we talk about all the time, you
yeah,
can choose your own difficulties. So is being an entrepreneur, does it present a lot of challenges? Absolutely. Does working 40, 50 hours a week at a job you hate for a boss that you don't respect,
yeah,
that presents a lot of difficulties and presents a lot of problems just as well. So
yeah,
having a strong mindset to see yourself through those difficult times, which will happen. It's not if they will happen, it's when they will happen.
yeah,
So again, Robert Kiyosaki is all about mindset. So you just gotta keep your head down, believe in yourself, have a solid plan, have solid systems, and keep pushing.
yeah. Yeah, you really just struck something. You were mentioning that, talking about difficulties and challenges. And they are, it's real. And I think you bring that up. That's a great point. And just looking at real estate, it's not about, and I think a lot of people forget this. I know I do a lot of times. I forget about it's not just about making money or seeing all the best, but it's about not losing it. It's not how much you make, but it's how much you keep. And he talks about that as debt and leverage and how to approach that risk. How would you look at that, Mike? What to you look at debt, leverage, and risk within the book and what you learned and how you apply it to your life? What does that look like? Or because it is real. There's both sides of the coin. There's opportunity for great risk to make great wealth, but also, great wealth with debt and leverage. What do you think the author's trying to convey with all that?
Absolutely. And again, we talked about the paradigm shift, the mindset shift
Yeah.
before of being an employee to being an investor that buys assets and not liabilities.
Yeah.
So many times, my younger self, I'd say, okay, cool. I need a new car. And, so many people's mentality was to say, okay, cool. I work 40 hours a week base. I'm going to start working some overtime. I'm going to start working some nights and weekends, and I'm going to trade my time, trade hours of my life, presumably for a salary, for money, for pay, and then take that pay to go and buy something else, right? Buy whatever it is that I'd like or I need in my life. So the way the American financial system is structured, if you're able to take debt out against an asset, a house, again, we're real estate centric. So we'll say a property, any sort of equity taken out of that property is tax free. So
That's pretty sweet.
yeah, exactly. It's the best. So if we go back to scenario one, where we're trading our time, we're trading our hours for money. Well, we all know that, you get a paycheck at the end of the month usually, and, taxes are withheld. If not, at the end of the year, you need to pay probably somewhere thereabouts of 25% ish of your paycheck over to the government. If you make, if you're lucky, fortunate enough to have a better job, you could end up paying somewhere around 40% or more. So if you go back to the mindset of buying assets, not liabilities, you don't have to trade your life. You don't have to trade hours or time of your life for money. You can leverage the assets that you already have to receive money, to receive capital, tax free. So that in and of itself is, if that is something that a reader did not know already, I mean, that is through the course of a lifetime, how much will that save you? How much will that benefit you and your family?
Yeah. I think it's a great point you bring up. And just look at that. I think one of the things just to kind of highlight is, your house. He brings up the point, a house being a liability or asset. I just want to kind of dive into that and just see where your thought process is. You kind of touched on it a little bit. So do you see a house as an asset or liability, Mike, to kind of dive into it? What do you see a home, your personal home?
I like this. You can go both ways with this.
Once you step on, what do you think that the thing is though? What do you think?
I personally think a primary residence is an asset. I personally think that if you buy a home and put 20% down and take a mortgage out, I believe that to be an asset.
Okay.
Now, big caveat there. So had we been from...
Well, you got to pick a side of the street, Mike. Come on now. One or the other.
This is a caveat here. So what do you think? I guess straight off before I add my caveat.
So you say it's an asset.
Yes.
I say it's liability. I want to go with what the author says. He says, man, you lose your job, you still got this mortgage to pay. It's not producing income. I mean, I kind of agree with him. I think you get a house, maybe it's emotional, you like it, it's great. You can do some things with it maybe to leverage, but end of the day, point blank, it's a liability. Tell me where I'm wrong, Mike. Prove me wrong. Go ahead. Prove me wrong. I want to hear what you guys say on this.
Well, I would say, let me give you two examples.
Please.
Let me give you two examples, both starting in the year 1975.
Okay.
And ending in the year 2005. So 30 years.
Okay.
Right? So we'll say that I decide to buy a house in San Francisco.
Okay.
In 1975. So that, and let's say I pay, get a 30-year mortgage, it's all paid off in 2005. I don't have the numbers offhand.
Yeah.
But the appreciation, and I'm bringing up San Francisco, for example, coastal markets, I think it's in the top 3 consistently of the most expensive real estate markets in the country.
Sure.
So if you think about appreciation, the increased value year over year of your home, it's increasing in value more than inflation. So not only are you paying down a fixed rate mortgage, the asset itself, the property itself, is going up in cost. So essentially, you're making more money by paying your mortgage than you are just leaving it in a bank and maybe buying CDs. So that's why I say, and I bring up San Francisco specifically being a very well appreciating market over the several decades. Now I'll take the same exact scenario and I'll switch San Francisco for Detroit. And love Detroit, not trying to be negative, not trying to throw any shade towards anybody in Detroit. But if you bought a house in Detroit in 1975 rather than San Francisco, and again, did everything the same, paid your mortgage for 30 years and owned your house outright in 2005, I think the population of Detroit, I think it decreased by nearly 50%.
Wow.
The job market completely
Yeah.
collapsed,
Yeah, I didn't know it was
and
that much, but yeah, I don't know it was a
there
big number. Yeah.
and unfortunately, the appreciation in the real estate market is it's just not there. The cost of properties has gone down dramatically.
Yeah.
So that's why I give that little caveat to say that it's very dependent on the market.
Sure.
Depending on how long you decide to have your primary residence, and then what market you are and you find yourself in specifically.
No, I would agree with that. That's a
So
good point. I think real estate is specific. What's the three things they say about real estate? Location, location, location. Well, you bring up a great point. We can go back and forth on this one. I don't know. I think I agree with the author. It's a liability. You say it could be an asset. I think if you structure it properly, it can go either way, but you have to be strategic about it. So I think that's important. So just something thought about the author. This is something I would probably talk about more. I think part of the book, they also talk about, businesses and maybe you work the trades versus going to college. Rich Dad told his dad told him to go get an MBA in business, so he did. I think doctors, attorneys, certain professionals need post-secondary, but I think most folks, this is something we talked about, most folks in business, I don't think you always need a degree. So I know that, Mike, looking at that, let's pop into something maybe we didn't agree on. I thought maybe you liked and I didn't like is the story of history of taxes in chapter 4. Talks about the history of taxes, power of corporations. I thought it was impractical. Pitch me why you think that should have been in the book and why I'm wrong on that, Mike.
well, it's a great point right there. I think having an understanding of corporate structuring is
Yeah,
absolutely essential, especially if you want to scale, if you want
yeah,
more than one property. um, for a number of reasons. Number one, it is a good barrier, good protection for any legal situations that may arise if, a lawsuit or any sort of problem. It's
yeah,
always good to have a little bit of a legal barrier in there to really separate your personal life and maybe your primary residence from everything that you have as an investment. I'd say that is very important. Number two, the way that you're able to structure your business, your corporate structure, your entity structure has quite a bit to do with tax savings. There's a lot more write-offs and advantages that you can use if you have an understanding of corporate structuring.
yeah,
And piggybacking on that idea, leveraging retirement accounts that you have and maybe connecting your retirement accounts, self-directed retirement accounts to your entity structure is extremely important. And then I would say, lastly, nobody likes to bring this up, but if we could find ourselves passing away this afternoon, or we could live 100 more years, but at the end of the day, every single person listening or watching this podcast is going to die. So again, succession planning and passing those assets on to family, friends, maybe a charity that is very important to you. Um, Again, nobody likes to bring that up, but it's essential. It's essential to think about if you're thinking generationally.
yeah. That's your point in there. I just think in that book, I don't know. I thought the context it could have been different, but he does do a good job of that, getting into it. I think I would agree and kind of laying a 10,000-foot view level. Then he's got some other books, obviously, in his series that really kind of dives into
Yes.
that. So, yeah, appreciate that's a good point of view. It's something I want to kind of offer, real quick plug. We have another podcast. If you enjoy this podcast, we have a sister podcast called the Real Estate Profits Podcast. It's all on the major podcast platforms. And if you are enjoying what you're hearing here, please like and subscribe. We can talk about more books. If you have a book you want to talk about and share or want us to get into, I would love to hear from you. Mike and I don't have the corner on all the real estate investing books, and we're always looking for something better. So if you have something you'd love to talk about, throw it in the comments. We can jump into that. Obviously, Mike, we can't talk about all the principles in this book. I know you got a lot of
No.
notes. I want to kind of make a quick point that really struck me. And I want you to kind of dive into some of your notes or some of the quick points that you got that had a lot of leverage for you. But I think one of the things I picked up was kind of minute, but it really struck me is if you're arrogant, you'll never learn. But if you're arrogant and intelligent, it equals ignorance. So I think really this is a book that's a springboard for learning more. And I love that. And I think that's kind of the nutshell of this book and why we even started this podcast. We're always reading, we're always learning. And that was probably my big takeaway. So for Mike, for some of the notes you put together, I know you kind of nerded out like I did on this book. What were some of the big takeaways for you, or even one of the big takeaways you want to hit on this?
Well, I think we were in agreement. Uh, the important thing that Robert Kiyosaki really, really stressed in this book was to be a lifelong learner.
Yeah.
The real estate market is ever changing. Probably what we're seeing now is quite a bit different than what we were seeing, for example, in 2020.
Yeah.
So just being informed, having as many tools in your toolbox, meaning having as many strategies and as much knowledge as you can in your head going into the deal and being creative is only going to happen if you're just constantly reading, constantly learning, constantly listening to podcasts and trying to improve yourself.
Yeah.
So again, I'd say just mindset. Again, this is just as much of a mindset book as it is a book on investing.
Yeah.
So just having a strong mindset and being a lifelong learner. And again, I'll back up a little bit. That's why we started this. I think we're trying to constantly read, constantly better ourselves.
Yeah.
And you have to. If you want a competitive advantage, it's a non-negotiable.
I couldn't agree more. And I hate that we always agree, but I'm with you when you're right, Mike. So let's just go with that. All right. How about out of this, get a final rating out of this book? I want to get a final rating. 10 cash flowing doors. What would you rate this book? And does it belong on the investor's permanent bookshelf? I give this a 10 out of 10, but I'm a little biased. What do you give, Mike? What would you give this?
Here we are agreeing again. I give this a 10 out of 10 as well.
I thought you'd say at least 9. At least, come on, man, give it a 9.
I'll reiterate again. Awesome book. For plug again.
That poor book, you destroyed it, man. It's got more paper and notes coming out of it than it has pages in it, bro.
I know it. I'm trying to get my nieces and nephews to read it so we can talk about it. So I love it. It's a great book that really opens people, especially younger people or people new into business. I think it really is a great mindset shift that Robert Kiyosaki is explained and laid out. This is arguments and his philosophies he laid out perfectly.
Yeah, great book. I think it's put together well. I totally agree. Once again, Mike, thanks for popping on and joining us today. I think I appreciate it. And I'm so grateful for you guys joining us and tuning in. I know time is valuable. There's a lot of information on the internet. We appreciate you taking your time off and joining us today. So we're grateful for that. And once again, we'll see you next week on the Real Estate Investing Book Podcast. Enjoy us next week as we dive into more riches behind the pages in the podcast room. Thanks so much. We appreciate it. Thanks, Mike.
Thank you for joining us on the Real Estate Investing Book Club podcast with your hosts, Chris and Mike.